Talking about the yuan today, and since Beijing announced that it is allowing a more flexible trade on the yuan, the Chinese currency has gained around about 0.2 or 0.3 of 1%. There's a couple of the cross rates that you can see with the currency. Now, in this same period, most Asian currencies have weakened against the US dollar, which is contrary to what many analysts were expecting to happen. Johanna Chua is one of them. She's chief economist of Asia Pacific at Citi, joining us live from Hong Kong. Jo, of course, you could say that it's very early days, obviously, at this point that we're talking about this. But I notice certainly from your research, when you're talking about the nominal RMB appreciation, certainly in the short term anyway, you believed that the economic impact would be very, very limited, and part of the reason is because the Asian currencies would appreciate alongside the renminbi. Now, while we've seen a very small appreciation over quite a short period of time, most of the Asian currencies along the same time period have actually gone in the opposite direction.
Yes. I mean, I agree that actually, obviously in the longer term, we think eventually the currencies will move, historically have been positively correlated. And in fact, the beta has been above 1. But recently, I guess as a reflection of the global risk environment, the positioning of the market, we've actually had the opposite effect. So that means that perhaps the impact, will be marginally even be a little bit better than it had been if they all moved alongside each other.
Different picture, though, in terms of what you're looking at for when you're looking at the medium term, the real appreciation of the currency.
Yes, I mean, I think, a lot of the market keeps focusing on nominal appreciation of the renminbi. And given that the move is going to be very, very gradual, and eventually, that's going to be accompanied by other Asian currencies, the impact could be small. But I think over the medium term, we really need to not just focus on nominal appreciation, but real appreciation of the currency, not just by nominal appreciation, but also higher inflation and the adjustment of prices in China. So over time, as China starts gradually rebalancing its economy towards more consumption, we're going to see more, real exchange rate appreciation going forward. And that could have some longer-term implications on Asia, primarily via 3 channels, via trade, via inflation, and via capital flows.
Johanna, RMB appreciation is supposedly going to bring more pros than cons for the Chinese stock market, whether it's the asset players or the large importers. But why aren't we seeing that?
Well, the problem is, obviously the backdrop right now is very, very focused on what's happening in Europe, concerns about slowdown. We're seeing that in some of the data, even in the Chinese data. We saw that with the PMI. So I think the focus has really been obviously on the economic momentum going forward and the risks on the global backdrop. So the fact that renminbi is, moving in an environment of global risk aversion, that's kind of counteracted the impact on capital flows. But I think in the medium and longer term, things could gradually change.
Oh, right. Do you see the yuan appreciation story as an economic turning point in China, where we're going from export-driven economy to really being domestic economy-driven?
Yes, I do think so. And it's not just the renminbi appreciation. Actually, China also announced the elimination of the EVAT rebates for about over 400 export products in China, starting middle of July. So you can see that gradually we're starting to see some small relative change in the effective price of the tradable and non-tradable sector, and China basically moving away from overly stimulating and overly dependent on exports and encouraging more domestic demand. So yes, I think the move on the renminbi is more symbolic in terms of the gradual move of China's economy. But having said that, I think in the near term, given the global backdrop, we're probably not going to get much appreciation of the renminbi, and therefore the impact overall globally will also be fairly muted at this point. But I have to say I'm quite impressed that in the first 2 weeks of the renminbi flexibility, the renminbi actually moved quite a bit, a little bit more. It actually moved almost 0.8% so far, which is quite fast.
Who are the winners? Who are the losers from this, Joan? I mean, we're looking at trading opportunities here for our viewers out there. So who wins, who loses?
Sure. I mean, if you believe in the longer term that renminbi over the longer term will have a real effective appreciation, then clearly countries who export relatively similar products to China that compete in the third markets will benefit a little bit more. And the problem is, it's a little bit hard to figure out who looks more like China, because a lot of countries in Asia export to China for intermediate goods for re-exports. So if we did a little bit of a study on net export similarity across Asia, and we find that countries like Taiwan and Philippines have the most net export export similarity to China, but the problem is it's very, very concentrated on electronics. And a lot of those goods are actually production linkages, so they're actually intermediate goods for re-export. So I don't think they're going to benefit as much from renminbi appreciation. However, for countries like India, like Thailand, Pakistan, where there's a broader set of goods that overlap with China, that I think there probably could be a relatively, at the margin, a little bit more competitive gains. The other place where you also see benefit is clearly renminbi appreciation will improve the purchasing power of Chinese consumers, and that will help the demand for imports. And the countries that can benefit the most are countries who export to China for domestic demand rather than reprocessing for re-export. And we find that commodity exporters like Australia and Indonesia will benefit, as well as low-cost manufacturers like Vietnam could benefit as well.
Well, there's a lot more to the story when you really do start digging underneath it, isn't there, Joe? Thanks so much for chatting to us today on Cashflow. Great to have you.